Hi everyone, today's Wednesday, January 29th. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. Yesterday I was a little late getting the video up. I apologize about that. Today is going to be action-packed. Not to mention we've got big earnings on the horizon, but we've got an FOMC announcement. Everybody thinks they're not going to drop the rates. Their language might change a little bit. We've got trade goods, wholesale inventories, EIA reports, and then the Fed chair conference, which could jolt the market. This today could be absolutely crazy. So what do I want to do? I want to go back to the daily charts for a quick minute. And here we are taking a look at the E-Mini S&P futures contract. I've drawn a Fibonacci on the largest candlestick of recent days to see that the two candlesticks of the current days, today and the day before, are sitting inside that candle. So the breakout of it, either to the downside or the upside, is going to be important. Is there a go, no-go space here? My thought is yes. So here's what's happening. We have high momentum that started to come off a little bit, and we still have upward to flat moving averages. So this tells me I'm in a sideways patch. So the sideways patch could start breaking down as quickly as losing 60. Now, we are at 60.96, but our candlesticks have been a little wider as of late. And so this 60, this area at 6,060, looks like the above we go long, below we start hunting for deeper support action, and that level below is 6,008. Now, if we go to the hourly chart, got the same Fibonacci's, we can see that we had, notice, see how momentum stays high as the prices move up and down. If momentum is high and you've got a slope in the underneath Keltner band, right? Because that's where pressure comes in from the buyers. You know it's a dip buying formation. Now we've got a little slant to our momentum indicator, but we still have bullish upside pressure. So this slant down tells us that our tops very likely to find sellers, but we're still in a buy the dip zone. Okay, so if we look at the daily chart, we say 60.60 is the go, no-go area where we would say I'm long above it and short below it. That means we have to wait for it to come in to give us some support action before we decide we're going to go long. Up here, we've got clear resistance and drifting momentum, and so it tells us that the traders are likely to find the VWAP or the points of control. Well, the point of control is up here at 61.30. We could still get that. The VWAP sits below at 60.82, and then that deeper edge near 60.64 is going to be key for buying pressure. I say over the next little bit, slow down the speed of your trading, slow down how many trades you're going to take, and then watch this framework. You know, I am very keen on paying attention to the opening range candlestick, 6 to 7 p.m. Eastern. And so far, that is 60.94 and 60.82. Buyers are going to try and come in at that 60.82. They really have been trying to come in at 60.94, and they've been bouncing, but they can't get up over 61.06. So we've got ourselves a very rangy environment that feels like it still wants to grind up. Okay, so deep dips, you buy them. If it starts stalling out at the top near that 61.05, just take your profit, come back later. Right? Dips or buys, wait for the dip, and bring it all down. Could it rotate over? Yes, but why don't we trade what we see? And when it changes, we change how we trade. Okay? So here is the NQ. Here's the daily chart. What did I do? I drew a Fibonacci on the biggest candlestick formation where these guys are sitting inside of that range. My thought is, as long as it can recover the 50% area, it's a good buy zone. So that's 21,307. We can see yesterday we dipped well below that, almost 150 points below it, and then immediately recovered and moved all the way up. Price action like this is going to happen here in the NQ, the E-Mini Nasdaq, because these moving averages are sideways. And remember, when a moving average is flat to sideways, having little or no slope, it's clearly telling us that there is as much behavior above as below, and the net of all of those candlesticks is somewhere around zero, right? The rate of change ultimately is sitting in a box. And so the dip buying formations still working. Dips could be deeper, spikes could be higher, especially as the heavy hitters come into the earnings space. We've got a ton of very important earnings on the horizon. Okay, so that's what we're looking at. Here we are at 21,750. That looks like a resistance zone, but really the sell points would be at the bounce into 22,151 and then something that looks like this, right? Can't get higher, breaks the support, bounces to a lower high, and then Bob's your uncle as soon as you lose the close of the big candle that moves into that space. That's what we're looking at. Okay, so that being said, let's go to the hourly chart. We can see they're trying to lift, trending still continuing from that savage dip yesterday. And so now what we're looking at is, can we hold, where's the 50% event? The 50% event of yesterday's motion, here's the high of yesterday. That was the opening tick of the opening candlestick. The low came at about 5 in the morning, and literally we spent the day trying to move through that space. Notice how tight the opening candlestick is here for the NQ. Very tight today. Pullbacks very likely to be buy zones. 21,525 first buyers in my mind. If we lose that edge, easily we can dip into the lower part of the range, and that's 21,250. Remember yesterday I said, hey, this is where the rock fight is, and I mean, we came in, broke it, and then turned right around and moved right back up. So clear resolution out of that space yesterday. We're likely to see the same sort of thing with that support edge being just a bit higher. Look at the slope of the underlying Keltner channel here. Everything is very, very bullish. So this chart is in pretty solid recovery. Dips or buys, okay? Target zones, 21,772 to 22,000. But if we get a steep dip, that would be the ideal place to buy, with the markers moving in between 21,528 and then 21,400. That's going to be that sort of sweet spot I am looking for. Right now, price action is incredibly compressed, super noisy, nothing going on here except retracing candlesticks. They're obviously waiting on news. Wow, I took a long time doing that. All right, let's take a look at the YM. Again, I'm drawing Fibonacci on the candlestick that's got the widest range in recent days. Notice it's broken out above, that's the zone, right? So everything says, hey, if I hold 44,890, this is going to be a potential buy zone, right? The close of that candlestick right near the open of yesterday's candlestick, anywhere between 44,890. Now, if it loses that zone, the next place it's likely to go is 44,725, right? And then if it loses that, 44,460. As long as it holds that 44,890, we've got upside pressure. If it doesn't hold that area, step aside, because we've got 150 points to the south, it looks like to me. Look at the price compression. Everybody waiting on the Fed. I mean, waiting on the Fed. So here we are, sitting in this sideways formation. Look at the opening range candlestick. It is just tight as could be. Nothing happening, right? Chopping back and forth. Traders trying to build whatever, scraping pennies, whatever, right? But bullish pressure, so deep dips, going to give you buy zones. We're in the neutral zone for the stochastic. Neutral zone stochastics also give us sideways pressure. So look for the wick down that comes into really pretty lines, either that 44,890 or maybe 44,800 as that is presenting as value area high. And of course, if it loses these levels, folks, don't give yourself a lot of stops in terms of saying, oh, I know the chart's supposed to bounce. I'm just going to take my stop off. And no, anything can happen in the market. The reason we say wait for the buy zone is so that you minimize the risk. You don't minimize the risk if you go, okay, I'm going to pull my stop and just watch. This will recover. Very bad habit. How do I know about those bad habits? I used to have it. Atrocious habits. Way to lose lots of money. All right, here we are. Micro Bitcoin, topping formation over here. Momentum pulled it right back up. The Fibonacci I drew is on this candlestick that occurred on January 21st. Now, essentially, all the other candlesticks are sitting in that range, right? And so what the traders have to do is close a day over this halfway area, which is about 104,800. So I just saw on the news last night, I don't know if it's going to make a difference, but Czech Republic decided, hey, listen, we want to borrow government note. This is the government themselves. We're going to buy Bitcoin. So who knows, folks, what's going to happen? But what we do know is the following. If we lose 99,600, we need to recover it quickly, or else it's not a good long, right? Notice the stop for that is $2,500 wide. This is a very sideways chart. If we go to the hourly, you can see that sideways motion. Obviously, the Fed is going to have some effect on what goes on here. All I know is this. Right now, we're making higher lows, but we're also making lower highs. So there is a break coming in some way. What do we see that zone as? I think it's that 104,600 that gives us a breakaway area, but we've got to pull back and bounce higher. And right now, every time we've broken away, trying to get into 104,000, we've collapsed and we've come back in to that 99,000 area. If I were trying to trade this intraday, I would say 100,000, look for buys there and cover them, as it gets to 103,800 and the like. If you want to short this, it's going to be hard because there's a lot of buying pressure here. I would wait for a very big spike that immediately collapses, like this topping formation right here, immediately collapses, and then give it a go. Have a very, very tight stop, right? $500-600, and that ought to do it. Okay, let's go to oil. Daily. Again, taking a look at the candlestick, the biggest one that the two nearest ones are inside of. All right? We don't have trend here inside of these last 3 days. But the bigger picture definitely tells us there's selling pressure. Now, if we look to the left, the last time we sat here, we were here for 7 trading days before we broke out. And when we broke out, it was fairly definitive. And that number was above 74.40-ish, right? We're going to be looking for that same kind of pressure today. The EIA report, that's going to do something. Is there a go, no-go space here? Well, here's my thought. My thought is that this could easily present as a bounce zone, even if it flushes. So if it flushes back into prior support, it could come all the way down to 71. That would be very sweet if it did that. Not sure it's going to do that. So if we stare down our intraday motion, looks pretty bearish, but we are basing. See this? We're holding the lows. We can't get up over the highs. Right now, that means we can buy the lows, 72.50, and sell it at resistance, 73.80. That's a ton of cash, all right? If you want to trade with trend, it is a little bit sideways. And so what this trend says, if we just take a peek here, is the bounce event going to make a fairly good sell zone into support, but we also have bottoming formations right here that could look very nice to the upside. A little bit of a mosh pit. I don't love it, right? I think we ought to wait. No areas to strike and have low risk. Okay, let's take a look at gold. Probably going to move a fair bit today with Powell. Last time Powell was on the podium, the market sold off like a stone. So, yeah, stone in the river. I don't know what's going to happen this time. That normally doesn't happen, but gold is very likely to have some motion. What did I do? I drew Fibonacci, covering the candlesticks that are most nearby. Uh-oh, a sneeze is coming. Hang on. Okay, be glad that you missed that. I just want to tell you. So here's the top end, 2780. Looks pretty good. Pull back, 2730. You know I love 2740. The volume point of control right here is 2750 currently. Momentum here, really pretty bullish. Slope, bullish. That means dips, going to find buyers. Where's the best dip, Anne-Marie? I like 2740. What's the bottom of that? Well, you might have 6 points of risk. So how about letting it come down, holding the edge? If you're staring it down and you're saying, Anne-Marie, what about this? Isn't this a double top? It could be, right? It could be. But see how steep this slope is? It hasn't had a chance to flatten yet. It's got to flatten and then rotate. See this double top of sorts right here? It faded into the base of support and then turned around and ran right back up. Could this be the same thing? Yes. Could it come down? You know what? If I had my druthers, I would love it for this chart to come back into 2624. Okay? But we don't run that kind of risk intraday. That's not something that we're going to be thinking about. We're just looking at rotation here, and it's really sideways. If my slope is moving down, my momentum is sideways, my moving averages are sideways, I'm going to find support at the bottom. I'm going to find resistance at the top. Very, very sideways price action. Likely to change, but so far sideways, so you just look for the breaks. Here we are with SPY, and SPY, you know, got an upward slope on the 1 hour from the daily. Let's show that picture. From the daily, what do I have? I have both of these drawn. I have a Fibonacci drawn for this. No, I don't. What do I have here? All right, forgive me. This is the Fibonacci I have drawn here. The big breakaway wave. This is the 50% marker. The fade day before yesterday held that 50%, coming up over that level right here at 594, brings buyers right back into gear. This Fibonacci measuring this day shows us at the 150 marker, pretty close to the gap. So my thought is, as long as we hold 601, we'll fill the gap above into 607. That is my thought. If we don't hold 601, you know, here we go back into the noisy mosh pit of whatever. We have a declining momentum event, but that's, you know, lagging. And so trend is up. It tells us that the dips are buys. The lower high is going to be annoying. If we pull back to 598 and hold, that's going to be a nice buying area. All right, Qs, looking at the daily. These guys are the ones who are going to have the jolts. I don't know if it's worth it to buy some zero-DTEs for a couple of days in advance to see what happens. It might be pretty interesting. But in any case, here is liquidity at 539, and that's liquidity resistance. Liquidity support looks at 502, 30 points plus of a range. That's bonkers. But you can see for the last 3 days, we're sitting inside of this big candlestick. Here's the 50% marker of that candlestick. It's 516. Above that area, we should be looking at longs. Below, we're going to have to pump the brakes until it recovers. Okay? If we get to the top of the range at around and about 530, it could easily be a topping space that could give the trader another move to the downside. Sticky days, folks. Watch your risk more than anything else. Watch that risk. See you on the streams.